Hi, my name is Rod Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. And I've got a real treat for you today. It's a gentleman named Sterling White, who I interviewed, 4 or 5 years ago when he had a partner and Jacob, and they're no longer partners, but it's all amicable and all that. But he's on his own now, and he's been involved in over 1,200 doors. He's sold a lot of his assets recently and getting ready for what's coming, like I am. So we're going to have some fun today. Welcome back, brother.
Man, it is so great to see you, Rod. It's definitely has been a while. You're looking great, looking sharp. I see the beard and the stubble that's going on.
Yeah. Right. I'm a lot grayer than I used to be. But other than that, life is grand.
From wisdom.
Right. Yeah, we'll call it that. We won't call it the stress that really it is, but no, life is good, brother. And it's great to see you and great to see how successful you are. And I've been, a little fly on the wall for a lot of stuff that you've been doing, through social media. Social media is a beautiful thing, but why don't you bring us up to speed a little bit on what you've been up to, and then we'll dig into some fun topics.
So I'd say is one, I no longer live in Indianapolis. I actually moved out here to Houston, Texas.
Okay.
It's been a great experience. The one only disappointing thing that I've experienced is they say everything's bigger here, but the toilet is the same size as the ones back home. So I think I just have a defective toilet. I have to get that changed out. And went through the the 2020 crisis that we had with the sickness and all that. So through that's where I actually had one of my biggest breakthroughs and where I made the decision to move. So there's that. And then also over the years have divested a lot of the holdings and sold and really getting some good some sales prices from that. And getting ready and prepping for the downturn that I believe we're going to experience here soon.
Yeah, no question. Well, for those of you that haven't been to one of my boot camps, I use Sterling and his old partner, Jacob, great guys, as an example of doing what other people aren't willing to do. And I actually flashed their picture up on the screen at my boot camps because,
and it's when I had hair too, Rod. That's one thing.
Hair
also.
Back then. Okay, well, see, we're getting older, man. But and I talk about if you're willing to do what other people aren't, you'll always be a success. And I use my own example of knocking on doors of people that were in foreclosure and buying hundreds of houses that way back in the day and helping people. And then I used Sterling and Jacob as an example of, I remember you guys drove for dollars to find a 50 unit or a 48 unit. And then you actually called for rent ads on Craigslist and say, hey, do you want to sell instead of rent? And found a 40 or 58 unit at that same time. Remember when I interviewed you guys, you just closed on one, you had one under contract. And so, you guys were the poster child. I mean, I think if I recall, you found one of the owners through a child on Facebook or something like that.
Yeah, slid into the DM. The daughter
exactly.
Owner had so much trouble getting in touch with them. So I kept it strictly business, everyone, by sliding into the DM and then ended up getting their contact.
So yeah, you've inspired a lot of people to get off their butts and do what other people that you're not even aware of, to get off their butts and do what other people aren't willing to do to be a success. So, well, let's have some fun with some different topics. Let's talk about where we are in the market cycle right now. We talked about it briefly before we started recording. I'm very bearish right now. I think the soup is going to hit the fan. I think there's going to be incredible opportunity. Like I was telling you, I was hiding under a rock in 2009, and that will definitely not be the case now, but I'd love to get your thoughts.
Yeah. Were you literally hiding under a rock, Rod? I don't think
no. Okay, figuratively hiding under a rock because I was miserable because I thought I was set for life. And, I lost $50 million back then, but, it's all good. So,
yeah. And I would say exactly what you mentioned is just looking at the the conversations that I'm having with other investors, and I'll just give you a prime example. Is this was the third deal I ever acquired. This was an 80 unit in Indianapolis. Bought it in 2018 for $3.35 million. Several years after that, sold it for $5 million. Rod, I'll tell you now, I have no idea how that person is going to make that deal work.
Yeah.
So those are the ones that I start to see coming up. And it's the same with the current deal I have under contract that selling. Is I just don't know how people are going to make those work. And I believe they're making the same mistake that I made on my second deal and just overpaid for it and didn't raise enough money to take care of the renovations. And shortly after that, it just didn't end up working out. It ended up coming to bite me. Luckily, ended up selling it and did good, but that was when things were heating up in the market. It could,
but you had some stress, you had some sleepless nights, and no, there's no question in my mind. Examples like you just, we'll be investing final on a deal, and we're like, it traded for what? How the hell do they not have any debt, or are they promising any returns at all? And so a lot of skinny deals, not enough money raised, and then we won't even talk about bridge debt, and people that because Fannie and Freddie dropped their loan to value rates, everybody was doing bridge debt to get the higher loan to value to get the returns they wanted. And that is some onerous debt, adjustable rate. In fact, they didn't even insist on caps, a year or two ago. Now, of course, in the last year they have, but a lot of bridge debt that I think is going to be there's going to be stuff going into receivership.
Can you educate me a little bit more? Because I've been hearing more and more of that. Is it essentially that people are just putting more debt onto the property?
Yeah. So they borrow more money to do the deal to get the returns up. We've got a deal under contract.
So they'll go conventional on one part, a longer term debt, and then they'll bring in
no. They do bridge debt. That's their debt stack is bridge. Okay. But they're getting, they were getting 75% loan to cost and 80% in some cases, including CapEx and didn't calculate exit caps properly. I mean, cap rates are going up, guys, and they're going to start going up fairly drastically. If you look at a chart of what happened to cap rates in 08 and 09, it's significant. And if they didn't calculate a decent exit cap for their refinance, they're screwed. They're not gonna be able to refi unless they put a lot of money in. If they didn't get a rate cap and those, that adjustable rate goes up, they could be screwed and they're going to have real cash flow issues. So, I think we're going to see a lot of bridge debt get really ugly and I think it's going to be opportunity. So, that's what I think there. But again, Trump was just quoted as saying it's going to be a depression. Love him or hate him, he's been right a lot. So
you probably triggered a couple people by saying that.
You know what? I don't care. If that pissed you off, just stop listening to me, please, because it's not a political statement. It's a I'm hearing it from a lot of people that it's going to be bigger than people think. Kiyosaki, Rich Dad Poor Dad says it's going to be bigger than 08 or 9, but his MO is doom and gloom. That's how
he said that over the. I believe he said every year.
He said that. He said that every year for 10 years. But listen, I got to. We were talking about this before we started recording, and we just talked like the CPI index just came out and it's looking good. Inflation's supposed to be going down, but I got to tell you, this feels like 06 and 07 to me. And this is what I told Sterling before we started recording. And it's a gut feel thing. Now, I'm wrong all the time. My kids love to say, are you tired of being wrong? I'm wrong all the time. But I got to tell you, I do think opportunity is coming. And I'm in a lot of cash. I would encourage you all listening to get in a lot of cash or have access to cash. And, one of the things I taught at my boot camp, for example, was, pre-framing investors so they're not fearful in what's coming. In fact, let's talk about that next. I know you've raised a good amount of money. I think about 10 million or more.
Correct.
You've raised over yourself.
10.8 million. About
okay, fantastic. Yeah. So let's talk about, because in my opinion, this is an opinion. I think finding the deals is not going to be the issue as it's been over the last few years. It's going to be finding the money. And I mean, we won't even talk about the debt markets right now. The debt markets are just insane right now. It's very, very difficult to get decent debt right now. We've got an asset in Nashville under contract, 145 doors, and we're putting 60% loan to value, Freddie Mac fixed rate long-term, decent interest rate debt on there, and we still have great returns, and we're, at a 50-50 split on it. Is still fantastic returns, which is unusual. Most people have to, change the splits to make the returns, work. And we don't. And by the way, if you're accredited, text the word partner to 72345. If you hear this, it may still be some room in it. But it's a screaming deal. Beautiful, beautiful asset. But anyway, the point is, we had to do 60% loan to value to get the debt that we want. I wasn't putting bridge debt on it. No freaking way. I want fixed rate. Because here's an example of a bad day. And I kind of,
what was the term on that too, Rod? You happen to know? 10
years, 5-year IO, fantastic debt. I think there's going to be opportunity assumptions moving forward as well, because there's some decent interest rates out there, and, and the rates have gone up significantly. And so, I think there's going to be some opportunity there. And of course, the operators that are selling those are going to know that, but I think there's opportunity to assume debt. But like I said, I do believe that it's going to be raising the money that's going to be more. I'm already hearing it. I heard it at my multifamily boardroom mastermind. I heard it at a big event I went to in the Carolinas. Things have slowed down.
I've also heard it from, because I'm in the entrepreneur space and part of those organizations, and people in the startup world are having difficulty raising money due to the economic environment that we're in.
People are holding on to cash. They're fearful. Okay. And you've got to be able to convince them that, inflation's taken 9%. We'll see if the CPI is accurate, but it was 9%. You're losing 10% of your money a year. That's pretty significant, right? And so, real estate's probably is without question the best hedge on the planet against that. So, there's an additional educational component, in my view, to what's coming. But I'd love to hear your thoughts on raising money in this environment.
So myself personally I haven't gone through this cycle and raised money during these times. And so I would say is just a way to set yourself up is just the path that I'm currently taking is continue trust building. So those investors that you've previous worked with and you've established a relationship, you've already provided good, stable returns to them consistently. Those will be the ones you can simply tap into. So myself is I haven't been able to acquire any deals over the years because I've been selling, but my partner Jacob, for instance, he's continually raising money, and it's just from the investor network that we had already built and already established.
Good. Okay. So existing investor base. Let's drill down on raising money a little bit more. So you're building trust. Just elaborate a little more if you've got any other thoughts on how you do that. I know that you've got a podcast. By the way, what's the name of your podcast?
Yeah. So it's the Real Estate Experience.
Real Estate Experience. Okay. And so certainly that has played a role, I would guess, in your ability to raise money. Yes.
Yeah, I'd say, and this is the strategy that I use is content marketing. And I got this from the book Jab, Jab, Right Hook by Gary Vaynerchuk. And he talks about, and I've heard you say this before, Rod, and several times, is giving of value. So in essence, the jabs are the giving of the value, and the right hook is, hey, this is my deal that I have upcoming. Would you like to invest in it? A lot of times you don't even have to go for the right hook because you've created so much value. So the path that I took was being a contributor on Bigger Pockets, all the blogs, being in the forums. And then I started to transition to being on others' podcasts and then having my own podcast. And so it was content marketing and inbound marketing, to where you put the content out, people come into your ecosystem or funnel, as you would say, and you build a relationship from there, because people do business with who they like, know, and trust.
Yep. Like, know, and trust. Those are the operative words, guys. Yeah. I'm actually creating, it's kind of interesting. I know you talk about branding and so on and so forth and creating reach. And I'm actually doing a course. I literally, in fact, I have the manual right here on my desk to print. I'm shooting this course Friday. And so I've got this, I'm going to go through it with my team, and we're shooting it on Friday about creating reach through social media, because as you know, I've got a pretty significant podcast. We're 14 million downloads and largest multifamily Facebook group, really, I think in the world, 46,000 people, and so on and so forth. And so I've got a little bit of credibility there, and creating reach is such a key component in this business, in my view. Unless you're going to do it one-on-one, face-to-face at groups, there's
which
so
isn't
many
as
ways.
scalable.
Right. It isn't. Not if you really want to get big. And so, and you don't need 14 million freaking downloads. You need maybe a few hundred people listening to you. And just to kind of summarize in a very quickly, what you want to focus on is two things. Add value, like you said. You've heard me say it. I got it from someone else. I got it from Tony Robbins, actually. Add value until it hurts, and be freaking consistent. That's it. That's what you need to do. Don't put out crap, put out value. And the beautiful thing about this world that we live in and is social media is so extraordinary. I mean, I'm on TikTok, and we're killing it on TikTok.
But also, I want to interject real quick, is that the key thing that you also mentioned was consistency. Because the thing is, if you're not consistent, and it's always been this back and forth between what is it better, quality or quantity, I would say quantity, because in order to get to the quality, a lot of times you got to do the quantity to get the feedback, to make the changes. And then also the consistency is you're competing not just with other investors out there, you're competing with a lot of the media that's out there, a lot of the negative news that has people's attention. So that's also what you have to do from a consistency standpoint. And then, as we know, people's attention spans are getting smaller and smaller. So that's also what it helps from a consistency and just staying on top of their radar.
Yeah, that's the only way to do it. And we're all over social media and trying to, push people to the podcast and, get them engaged and add as much value as we possibly can. And that's the secret recipe here, guys. In fact, I remember when I first started my podcast, I used to say, I'll never sell you anything. If you listen to early episodes, I used to say, because I never planned to, you want to make God laugh, you tell him your plans. And, we hit 1 million downloads, like, all right, I probably ought to do something with this. And then I wrote a book, gave it away for free. I still didn't have anything to sell. And then finally enough people asked me for it. I started creating stuff. Now I'm a liar because I sell everything. We got courses, coaching, and, my students are somewhere in the 70 to 90,000 units owned range that we know of. And I've only been teaching less than 5 years. So I'm really proud of that. Building relationships, creating a brand. Go ahead.
But I was just going to mention that path you took is a great blueprint to have, is all of that value up front, versus if someone's more in a scarcity mindset, or they need the money, or they have a deal right there and they start trying to push content to push people to that'll deter people away. But if you put all of that up front and then at a later point go for the ask, you've created so much value. And it's in essence like exactly. Yes.
Yeah. And that's I'm really glad you brought that up. I kind of said it, but I didn't hammer it home like you just did, which is focus on the freaking value. Don't have anything to sell. Don't ask for anything. Just value. And I mean, I literally did that for over it. Maybe I have to think of my memory's horrible, but definitely over a year, maybe even over 2 years before I actually started having something to sell. And again, it wasn't by design. I really, truly wasn't planning on selling anything. I just, wanted to share my message about what I lost and why multifamily is better than single family. And then I knew I hated asking for money, and I thought it'd be a great, mechanism to raise money for these commercial deals. And of course it is. So raising capital, we talked about that. Know, like, and trust. So let's talk about, you transitioned from single family to multifamily. Yes.
Yes.
Was there an epiphany there? Was there okay, now I freaking get it moment? Just talk about that transition.
So for that and Rod, you've experienced this too with being in the single family home space, that it was very difficult to scale that. So having that many single families with Jacob it was 150 that we had, close to that, in about 120 in Indianapolis and about 30 or so in Dayton, Ohio. And this wasn't a portfolio of 150 single families. That would have been nice, or not so nice, but this was a lot of one-offs. So it was a lot of volume and a lot of volume and deals to look at in order to get that one. And then also we were self-managing. And I remember that this is another part where I don't have my hair, is that managing that many properties and also people. I'm not a manager of people. I don't enjoy it at all. And a lot of that ended up coming up to me. And the shift was made to multifamily because it's just more scalable and less moving parts.
Did you find that it hurt your cash flow as well, being spread out like that? Did you see that in your portfolio? Because I definitely, it took me 2,000 friggin' houses to get the memo. It only took you 150. So you're much smarter than I am. But we didn't really, I was at a 30% loan to value in 2006, and I still didn't cash flow that great. Okay. Because it was so spread out, so logistically challenging, and I tell people, if I send someone to one of my apartment complexes, we can stockpile parts. Everything's the same. And they're in and out in an hour. If I send someone to a house, they had to go see what's wrong, go find a Home Depot or Lowe's, go back and forth a few times. And so what took an hour at one of my apartment complexes took all day at one of my 800 houses, which is really what killed the cash flow. So I'm assuming you're nodding. I'm assuming you had similar issues as well with the single family portfolio.
Yeah, it's just logistics. And can you still hear me on your side, Rod, too?
Yeah. All
right, perfect.
Yeah.
It was just the logistics. And so I would agree with that.
Okay.
It looked good on paper, but the actual execution was the difficult part.
Right. So again, did you have like an epiphany moment and you're like, you and Jacob, or you're like, okay, enough is enough, or what happened?
I would say the epiphany moment, I wouldn't say it was just this one moment that happened. It was really a sum total of little moments and then some medium type moments. And then it was like, okay, let's go ahead and now make this shift. And I think it was when shortly after we expanded to Dayton, Ohio, and we started buying single families there. That's where I would say, do you say the tree falls on the horse or break the back, or however that quote goes?
That was a straw that broke the camel's back. Got it.
There we go.
Yeah. Got it. No, I feel you, man. I when they're out of town like that, they become stepchildren, and it's just a freaking nightmare. I had that in Memphis, and I don't even want to fly over Memphis airspace. If you live in Memphis, I'm sorry, but I had a bad experience in Memphis. I always ask in my boot camp, anybody here from Memphis? And if nobody raises their hand, then I'm like, okay, well, let me tell you how it is. And it was ugly. But anyway, so I know that you do a lot of let's shift to philosophy for a minute. You mentioned that you're evolving, which is a beautiful thing, especially at your young age. I mean, you're evolving is what I got from our little little chat right before we started recording. Can you elaborate on really where you wanted to go with that?
Yeah, I'd say is taking a look in. And one of the things we mentioned offline is just viewing the world differently. And there's stoicism, there's Taoism, there's pragmatism, all these different philosophies that are out there. And through stoicism, as an example, it talks about is accepting the things that you can control and the things that you can't control. And so let's say Rod has a bad day. We're on this podcast. He cusses me out. The only thing that I can't control that Rod did that, but I can't control how I respond to that. Mm-hmm. So it's that example. And then also seeing the world for how it is and not where I believe it should be. There's going to be tons of things out there that are unfair, I could use the excuse. Let's say I was born in Section 8 housing, as an example, born on welfare. I could use that. I was dealt lemons, you would say, as many people would view that, but I decided to make lemonade out of it. So it's just those different things. And then also from the book, The Four Agreements, one of the agreements is to not take anything personal.
By the way, guys, The Four Agreements, Michael Ruiz, is a fantastic book if you haven't read it. So you don't take anything personally. I love it. Yeah, that is absolutely one of the four. You said accepting, and I actually just did an Own Your Power clip this week on accepting, the power of accepting, and really accepting yourself, and then accepting your environment. No, I love the stoicism examples. I only listen to two podcasts. One is Joe Rogan's, the other one is Tim Ferriss's. Tim talks a lot about stoicism. I get excited about my podcast getting 14 million. I think he does that a week. It's enormous podcast. Yeah. But and while I'm on that topic, let me mention something else. I talk about the importance of focus as it relates, especially right now in what's coming. To you're focused on the positive and not focused on the news and all the crap that they put out, which is really all it is anymore. But really bringing in good stuff, standing guard at the door to your mind, and how important focus is. And I listened to Tim's podcast, and he interviews the best of the best in the world. The best athletes, Michael Phelps, and the NFL players, NBA players, actors like Arnold and Jamie Foxx and Ed Norton and Hugh Jackman and
Jamie Foxx has got some great stories, by the way. I enjoy his podcast.
And billionaires like Ray Dalio and other heads of. He had Zuckerberg on there. He gets the biggest names in the planet on there. And I started to hear a pattern. And that is most of them meditate. And what does meditation enhance? Focus, right? Focus is critical, guys, especially in what's coming. You got to, just limit the crap that's out there on the media, bring in the good stuff, because, you're a leader. You wouldn't be listening or watching this podcast if you weren't a leader. And in what's coming, the world's going to need leaders. And so focus is critical.
And I want to comment on that, because I was just on the podcast earlier, and the guy asked me one of my habits, because he saw as I was talking, one of the things that came up is that I don't check my phone or anything before noon. So that's one thing. And then also I don't have my notifications. So if someone calls which I had missed the call earlier, is that I have these sensors on to allow me to focus. I don't check emails throughout the day. I only put a specific set time, but anything before noon, no form of social media, only check social media once a day. And then also I don't check my phone or emails or anything before noon.
Wow.
My phone is in a whole nother room.
That's discipline, brother. I don't think I could do that, but that's really impressive. And actually I was running late today, guys. And my team's like, we tried to call, I'm 10 minutes late. We tried to call him and text him and he didn't answer. And so I saw you come on. I came on and said, hey, I need a few more minutes. No, that's really impressive, man. I couldn't do it. I'm just going to tell you right now. I'm so glued to this damn thing, but I'm pretty effective. So I'm still able to get things done. But So right now you're almost have sold all your assets. So you're like getting ready. You're getting in cash. You're getting ready to capitalize on what's coming.
This deal that I'm under contract on, which was that, and this is a story in itself, is that the buyer was set to close the end of July. It was a 1031 buyer, 60-day closing. Towards the end of July, they had to push the closing. Guess what happened 2 weeks later? A fire. I know what happened. Oh, a fire. Oh, no. Yeah, a fire happened.
Economic conditions. Okay.
So there still was that too, but is that 8 of the units ended up going down. And then now we're going back and forth with the insurance company, because it's going to be about $1 million of a payout they mentioned they were going to do. But if we sell that would be in thirds. So up front during the construction process and then after it's done. But if we sell the property, that the last ones won't go through. So now we're negotiating to see if we can at least get 70 to 75% of that $1 million. And then we have to go to the buyer to see if they're willing now to still go through with the deal.
Interesting. Yeah. Well, that's business. That's real estate. Exactly. And that stuff happens. And luckily you're not under the gun. And you don't have to sell. So, there is that.
And that just goes back to the example that I was mentioning, is that accepting the things that you can control and can't control. I could have threw a big fist and all that. I just simply said, Jacob, are the people there okay? That was good. And then, okay, we got to move on. Yeah.
That's it. So the question I was going to ask you, I have a couple more questions, was, do you still have a team now, or is it just you right now as you're getting ready for what's coming? Just talk about team a little bit, because I know you and Jacob were a fantastic team. By the way, guys, they were a great example also that I see super successful, is someone that's analytical with someone that's outgoing. And, Jacob is super analytical. He's created his own software. He's got his own investor portal, just super successful. Sterling is outgoing squared. So So, I just saw.
I've heard squared before.
Yeah, well, it's true. I've seen so many
yeah.
very successful relationships like that. When people are playing to their strengths, man, success is inevitable because you love what you do. You've got passion. You can influence if you're playing to your strengths. And that's the beautiful thing about this business is there's so many different hats you can wear. You can be the outgoing person building the relationships with brokers, investors, so on and so forth. You can be the analytical person that does the underwriting. You can be the process person, that's got business management or project management or construction experience doing the asset management. There's a lot of places you can fit your hat. So back to my question, where are you at with team right now?
Yeah, so with the team, it's still the on-site team on the property that's in Indianapolis, but more so it's myself. I've got several VAs, but it's not it formally so is I had a whole acquisitions arm that was doing the direct to owner approach. So it's pretty much slimmed down significantly across the board.
Got it. Okay. And your VAs, are they Philippines or Latin America?
In the Philippines.
Okay. I've had really good luck in Latin America. Same time zone. I really, I had 8 VAs in the Philippines at one time. 6 of them I was paying $1.93 an hour each. And they were happy to get it full time, spoke English. So I had 6 people for under $12 an hour. True story.
What site do you use for the Latin America? Is it Upwork or is there a way you can go direct?
I think it's remote.co. But if you remind me, I'll have my team give it to you. I think it's remote.co. Okay. But okay. Love it. And lastly, what's your driver right now, brother? What is the why? What's making this, why are you such a success? Talk about that for a moment.
I'd say mostly this goes back to my childhood. And I actually haven't shared this with many people, and I've been sharing more about it, is that as I was growing up with a single mother, and that one day my mom, or I would say at one moment, my mom was upbeat, giddy, all that, happiest person you can be. And however, the next minute, completely different side of her, and she would change. So as a kid growing up in that environment, to the only person that is there as your the adult figure, I was walking on eggshells. I was constantly in fear or flight. So I just want to be an ideal and a message to kids who grow up in that type of environment, growing up in the hood, but also having is that type of relationship with their parents, is that, hey, I was still able to make something out of myself through that trauma that I experienced, and this is the path that I ended up taking. So I really want to be an ideal and a message for those people. And then also is there that same person, my mother, and love her to death, because there are some pros too, but she was also the person I heard on a daily basis that told me I wouldn't amount to anything. So I also use that as fuel as well. That's good
for you. Good for you. And some people that destroys, some people use it as fuel. Like you said, life is about meaning, guys. You choose the meaning you put on something, and it can be a positive meaning that pushes you, or it can be a meaning that debilitates you. And like when I lost $50 million, I would never have met my wife if it hadn't happened. And that's my meaning. And my God, I'd give it all up again for her. Besides being supermodel beautiful on the outside, she's even more beautiful on the inside. So, Rod's a lucky guy. And again, so life is about meaning. So if you have something negative, like I've experienced, like everybody experiences something negative, just decide what the meaning's going to be. And does that meaning empower you? And you can absolutely rewrite history that way. Listen, brother, I appreciate you coming on the show. It's been a real treat to see you. And again, it's Sonder Investment Company and the what is it? The Real Estate Experiment. What did you name of your podcast?
The Real Estate Experience. But I want to mention one little small detail too, is that there is a story Earl Nightingale he talks about, is there's 2 people. And they're asking is, why did you take this path in life? And the 2 brothers, why did you take this path? Why did you take this path? And the answer is the same. I know
exactly.
Yeah. One was
the story is the guy had a father that was in jail. And one of the sons ended up in jail, and the other son ended up with a business in the software business. I know this story very well. And they asked him the question, why did you end up like this? And it's the same answer. With a father like that, how else could I have ended up? Great example, brother. Thank you for sharing that. I had not shared that publicly. That's a great example. Well, listen, buddy, great to see you, man. And great to hear all your success. And, if you're ever down my way, of course, mi casa, su casa, would love to see you.
Yes. And tell Tiff I said hello as well.
We'll do, brother. Take care, man. See you.
Rod, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. Now, I know you've been hard at work helping our Warrior students do just that using our ACT methodology, which is awareness, close, and transform. Can you explain to the listeners how they can get our help?
You bet. Guys, we've been going nonstop for 3 years, building an amazing community of like-minded people. And our coaching students, which we call our warriors, have had extraordinary results. They've purchased thousands and thousands of units. And last year, we did over 1,000 units with our students. And we're looking to grow this group and take it to the next level. We're looking for people who want to follow a proven framework that's really step by step, and then leverage our systems and network to raise equity, to find and close deals, and to build partnerships nationwide. Now, our warrior community is finding success in any market cycle. So if you're interested in finding out more about how you can become more of our incredible network and take advantage of the incredible opportunities that are coming very soon, apply to work with us at mentorwithrod.com or text CRUSH to 72345, and we'll set up a call so you can check us out and we can check you out. That's mentorwithrod.com or text CRUSH to 72345.